Hey everyone, welcome back to Mitchell Markets. If you're new here, please be sure to subscribe if you want to learn the true factual mechanisms that professional traders and institutions use in the market on a day-to-day basis. Today, we are going to be taking another deep dive into Gamma and how I can trade Gamma daily when the setup is right and conditions are optimal. So as we've discussed in our previous videos, Gamma is a vital component in the market and it doesn't rise constantly. You have to look for particular setups and particular factors such as an avalanche of open interest at certain strike prices. This is a setup that not a lot of people know about other than institutions that have specific algorithms looking for these types of setups. Gamma positioning in the market is a key component that most people will never look at and never fully understand. If you have not checked out the previous couple videos to get a full understanding of how Gamma and open interest can be pinning stock prices, then be sure to check those out before I dive into this trading session. Now when you see the chart and there is nothing lit up, you are probably a bit confused as to what is going on. A few random lines here and there, the stock price not picking a solid direction, and a lot of jumping back and forth. And the underlying reasoning for this is the Gamma exposure. It is causing pinning in the market, and this is one of the most precise setups you can get that is also fairly rare. And I'm going to be going over exactly how Gamma is causing this. I'm not going to be going over my specific trades on the day. I'm not going to be going over my other confluences that I'm using in the market because this channel is for educational purposes and not to be copied, especially considering there's a lot of fraud traders out there and people always trying to sell you something. This is straight to the point and going over a complicated topic in a way that hopefully you'll be able to understand. So now that we have all the drawings up, there's a few vital things that I want you to notice. The first being this red rectangle. This zone right here is negative Gamma. So we're in a negative Gamma zone on the day. That is a key for me to look for shorts. It doesn't matter if you're looking on commons and so on. If you're in a negative Gamma zone, you're going to be looking for shorting opportunities, vice versa if you're in a positive Gamma zone. I have the positive Gamma zone marked up above where we would flip to positive Gamma around 691, 692 range. And this is going to completely coincide with the pinning that is happening on the market. If you're unsure what Gamma pinning is, watch a video that I've created about a week ago. It goes over all things Gamma, what the open interest is, what the pinning is, and how to properly understand it. So we also have a 690 wall, also known Gamma wall. So this 690 Gamma wall is going to be what is causing the pinning of the security price. And we have marked out a 691 rejection zone because we are staying in the negative Gamma zone. And what's causing this is the 690 open interest. So price deviating too far above or below 690 is going to cause hedging interest for institution positions and or market makers selling options. And now the reason why we would be looking for short interest here, whether you are going straight into common stock or if you are positioning yourself in option contracts, it is going to be because of this 691 rejection zone. There is a far stronger cap than there is a bottom in a negative Gamma zone. Unless we were to hit a Gamma flip, 691, 692 range, we are strictly looking for short positioning, just as there's far more risk reward here. So the key for today, without going into other confluences, was looking at this 691 rejection zone. We have rejected this zone multiple times at difficulty accepting a zone above 691. So we are looking for entry between 690.50 and 691 as soon as other parameters are lining up. Position sizing is going to partially depend on the volume influencing the trade. So as soon as we get a rejection off 691, I am looking for pinning on the 690 Gamma wall. Picture this, you're jumping up and down on a trampoline. You're loading up on the bottom, you're jumping up, and then gravity's pulling you back down. That is essentially what is happening in a high open interest zone where there is a ton of gamma exposure. But because it's a negative gamma zone, you're going to be going a bit deeper than you are higher. So if you have something extremely heavy on a trampoline, gravity is going to be pulling it down and you're going to sink a lot deeper. And that's essentially what is happening at this 690 zone. So after we get a rejection off of 691, of which I had a slightly early entry just because I did not want to miss the breakdown, which is why I have this 226 currently up as well on my fib levels. But as soon as we rejected off this 691 zone, we're going to get that constant pinning down to this 690 open interest zone. And once we break through this 690 open interest zone, you're sinking on into the trampoline. And then once you sink far enough down into the trampoline, you're finally going to get a little bit of momentum up back into this 690 open interest zone, this wall here. And you don't have to break through the wall because we're in a negative gamma zone. It is going to be harder to break through on the upside than to get a rejection. But you are always going to be getting that pinning sensation trying to bring you back to that 690 zone due to institutional hedging and market maker hedging. So this ties directly in line with the previous two videos that I had about gamma, and this is a very precise way on how you're able to capitalize off of it on your trading if you know what you're doing. This is a bit more of an advanced setup. You have to know how to read the chart properly and read the open interest zones properly to make sure there is actually enough exposure to cause enough hedging for the market makers to actually swing the price. So that's essentially it. Like I said, I didn't want to go into my actual trade. I'm here to educate and teach you something new about the market, and I don't think very many people are doing that honestly, are doing it correctly. I'm just here to change that. So if you enjoyed this video, if you learned something, be sure to drop a like, subscribe, drop a comment if you have any other questions. And if you are still a little bit confused, go back and watch my prior couple videos and learn a bit more about gamma and how you can effectively use it for your trading style, whether it be swing trades, whether it be commons, looking for positioning or add-ons to current positions. You can use this to help you get in at smart prices for smart money. Till next time, guys, I'll see you at Metro Markets.